All right, for all those people that finally decide to show up, let's see if you're ready. Okay, we got new people in here, so we have to welcome them to this, right? Okay, so are you ready? Class?
Yes.
That was weak. Come on, seriously. What do you think? Was that good? No, that's pretty weak, right? That was weak sauce right there. That was like trying to grab a hot sauce and realizing it was just salt. Okay, that's weak sauce right there. Now, anyway, for those people that are brand new in my class right now, you're going to put a page number 7 right here. So you're going to put pound 7 because on these notes, 8.2 is going to go on which page? 7. So page 7 is where that's going to end up, right, Jerry? Thank you. We went through and did a whole bunch of stuff last week. Then we left up here. Okay, so I'm going to start my instruction with this slide right here. What is wrong with this slide right here? It's, say it again, 2021, right? Now, if you guys remember from last week, every year this changes, doesn't it? Okay, every year it changes. So, is this correct right now? No, it's not. But as we go through and we do our homework, we're going to do it according to this. Okay, we would have to get a new textbook every year if you were to try to do this up to date every year. When we do our project and you bring in your W-2s and I help you go through to file your taxes, then that's where that's going to come to play. Okay, so that's we're going to have the up to date. I want you to know the vocabulary and where things need to go in my information right here. So, from this information, we're going to go ahead and take a look at this person right here. It says, calculate federal income tax owed by a person filing a return as a single, whose gross income adjustments, deductions, credits are given. Use the marginal tax rate from the table. Okay. So, single. So I'm going to go back. That is super important because right here, my taxes are based on if I'm single, married filed separately, married filed jointly, or head of household. Okay? Yes? That's important. So they're different amounts. So that's what we go with. So gross is 67,000, adjustments 9,000, and then here are different types of deductions. Step 1, determine the adjusted gross income. You guys might need to flip back a little bit. How do we get the adjusted gross? Gross. Okay, so gross minus adjustments. Okay, so we flip back a couple pages where we did that, right? And it's gross minus adjustments. So my gross was how much? Was it 67,000? Okay, minus adjustments, which is 9,000. Okay, and so how much do we end up making? This should be $58,000 is my adjusted gross. What is gross anyway? Anyone recall what is gross? Starting amount before what? Before taxes. Because when you look at that, you're like, damn, that's gross. How much taxes they take out, right? Okay, that's important. So now we have our adjusted gross right here. Taxable income. Before we have taxable, let's go back to this example right here. So in your notes, we have this example right here. So how did we get the taxable income? Subtracting the from my adjusted gross, all right? That's important. But now, deductions. Remember, we have two choices in deductions. We have two choices in deductions. What are my two choices? What are my two choices? I'll back up the notes a little bit so you can see that again. What are my two choices? Itemized. Standard or itemized? Which one do I choose? The larger of the two, right? So every time I do this, I need to do math before I could figure out what I'm plugging in. So let's figure out that right there. So we're going to look at the itemized deductions. What is the standard deduction for someone that is single? Anyone recall that number? What was it? Standard deduction for someone that's single is 12,550. So my itemized need to be more than that number. Ah. There you go. Itemized. Ah, pen's not working with me today. So itemized. So we're going to look at our itemized things. What was my first thing as a deduction on my notes? Which was? Very good. 7,500. What's the next one? Which is? 3,200. What's the next one? Charity? Which is? 5,450. Now, we can't do the next one yet. We can't include the next one yet, and I'm going to show you why. There is a rule in 2001 when they said this. So we could only count it if I'm going to go to the vocabulary here. All right, right here in my vocabulary. In my itemized deductions, it specifically says medical expenses exceeding 7.5% of adjusted gross income. Exceeding. What does the word exceed mean? Then, right? Okay, so can I count the whole amount? Say no. Only what is above 7.5%. Let's go find our gross income, our adjusted gross income now. There we go. We have adjusted gross income, right? So let's figure out what 7.5% of that is. So 7.5%, if I turn that into a decimal, what would that be as a decimal? 0.075, and I'm going to take that number and I'm going to multiply it by my adjusted gross, which is 58000, which gives me, I need you people actually calculating here today, so I need everyone following along, not just zoning out because I'm talking about stuff. So, everyone, yes, this is the time to pull out your calculator and do some calculations. So this is the time of class where I let you pull out your phone, not look at your messages, but on your calculator, right? And let's say, for instance, you are new to this country. Okay, we have this thing called the internet, where you could actually download free calculators. It's called NumWorks. It's a good calculator. Unless you're just, going to use the basic CryPhone calculator. All right, so what did we come up with for this number? 4,000? 3, 5, 0? That's it? 0.00? Is it money? Is it money?
Yeah.
Yes. Be dollars and cents, right? So there's no change on this one. So this part is important. This is my medical expenses here. And to go back to the vocabulary, it said exceeding 7.5%. Are we exceeding 7.5% with that medical expense? What was the medical expense in the first place? 1,500, right? The medical expense is 1,500. Can I include that? Which one's bigger? Is this bigger? This one is bigger, right? So I only could count it if it was exceeding, the amount that exceeds this. I can't count it, can I? Because it's only 1,500, right? So I cannot count that as part of my itemized deduction. I cannot count that. So these are all itemized, and we're going to add these together. There's one more number on there. There's a $500 on there, right, in your notes? That is tax credits. That's going to be at the very end. That means you paid $500 extra last year. Guess what you get this next year? You get to claim that. You get to say, all right, I already overpaid you last year $500, so this year, take down the amount of money, $500. Does that make sense? Okay. Add these up for me, please. 750032005450. Right? 50. 16 150. 16150. Is that what you guys got? Okay, good. So I'm glad you guys are actually following along on this. Keep up with the calculations, because this is not the easiest thing. This one problem is going to take us all class. And even though that certain people keep staring at their phone like someone's giving them messages or something, this is important. More important than that message that can't wait. Okay, which one is more? Remember, for deductions, it's always an or statement. Which one am I going to use? The 16,150, right? I'm going to use the itemized deduction for this instead of the standard deduction because we always choose the most. Let's go back to my page now. Taxable income. We get the taxable income, which is my adjusted gross, minus deductions. In this case, my adjusted gross was what, 58,000? Minus my deduction was 16150. And I know you all are going to do the math for me right now, right? Because that's what good students do. What is it? 4-1. You guys all agree? Yeah. Okay, so what did we call this last one? This is my taxable. That's my taxable income. There's a reason why taxes, it's not easy and no one wants to do it, and there's a whole career field just for people to file taxes for you. Back in the day, people used to do this themselves. Then it got super complicated. So there's my taxable income. So now from there, I need to take this number and take it to my chart. It's 41,000, right? Okay. In those brackets, which bracket is that going to end up at? Where's my 41,000 sit at? Somewhere in there. Which one? 22%. It's at 22%, right? So we are going to end up somewhere in here. So the way that the tax system works out, you don't pay 22% of on all your income. You just pay 20%, 22% on your income that you make over a certain amount. Yeah, it's kind of complicated, right? So we're going to do the math here, okay? To calculate this, okay, we're gonna figure this out. So you always start off with at the bottom, which is my 10%. You take 9,950, and you multiply that one by 10%, which is going to be 0.10, and that gives you 9.5. Okay? Because you don't pay it on the whole thing, we only pay it on certain amounts. So you pay 10% on your first 9,950. You pay 12% on your next bracket, which is going to be, it's going to be right here, so it's going to be 40,525. Minus the bottom, which is for all that amount right there, for all that income that you make within that range, you're going to do 12%. I know you guys are calculating this for me because that's what good students do, right? Now, if you're using NumWorks, put it in as is. Don't put the 12% on there. Put parentheses. 40,525 minus 9,950, close, open, 0.12, close, and it will give you your number on NumWorks. Just like that. It's like 3,000 something. I don't know. 3,000. Like that. Can anyone verify that for me? Again, I was listening to some stoners during second hour that were like, high as a kite. No, I got allergies. Like, dude, it's not even allergy season. I just got done rubbing my eye. Yeah, you just also ate a 5-pound burrito. Okay? So, anyway. So, don't listen to them. Okay? Do your own math because people are morons. Verify it yourself. Now, we still haven't got to our amount yet, which is in the 22% mark. So you take our value that we had, which was 41,000. What was it? 41,850. That was my taxable income right there. That's my taxable. Minus the bottom of the previous income, which is going to be right here. So it's going to be 40525. And it's always going to go in this pattern. It's always going to go in this pattern. So if I'm all the way down here at the bottom, I'll show you on this. If I'm down here in the 35% range, if I'm in the 35% rate, I would take my taxable, which is whatever my taxable amount is, minus, in this case right here, it's going to be 209,425. It's going to be this amount here. So I'm going to subtract it from this amount. Because everything over that, I pay 35% on. Minus this, and now this is going to be a tax rate, so it's 0.22. So do the math for me, please. $291.5. I'm going to add a 0 here. Why would I add a 0 at the end? Yeah, it's 50 cents, right? 0.5, it's 50 cents. All right, let's add those together. Add those together for me, please. Okay, this is how much we owe. We owe that much in taxes. $5,000 in taxes. That's crazy, isn't it? Imagine seeing this at the end of the year. Now, there's a reason why you get taxes deducted from your paycheck every time. Take this number divided by 12, and that's the amount of taxes you should be paying every month. That's the reason why in the income tax, they take out a little bit every time. And it's so you don't have to come out $5,000 at the end of every year. One more thing that we have. Now, AJ, didn't you overpay him last year? Okay, so what do I do with that $500 now since I overpaid him last year? Did I overpay last year? By how much? Okay, so now, be like, what do? Do we add that on here? We subtract it. Why do we subtract it? It was over, right? That's a credit that you have that you already paid. So what we're going to do is we're going to subtract our credit, which is only $500. But guess what? Every little bit counts. Which is going to leave me with 4,455.50 as my final amount that we, or this person in the problem, owes. Now, this is why you have tax withholdings on your paycheck. Because if you would have to see this at the end of the year, be like, hey, come out $5,000 at the end of the year, be like, dude, I ain't got no money. That's the reason why they withhold a little bit all the time. And so when you are filing or getting a job and they start setting up your taxes, you make sure you get the correct amount withdrawn, so you don't have to be this person. About 3 years ago, I owed $8,000 at the end of the year because I upped it in tax brackets, and then I was no longer taking college classes, and my daughter was no longer in college. So at one time, I had 5 kids still in school, 2 of them going to college, plus I was going to college, and so my tax, I was getting credits for all that. And then the next year I wasn't, after my daughter graduated and I graduated. So $8,000 I had to come out, bam, right there, end of the year. You guys don't ever want to do that, all right? So, that being said, guess what? That's it for this problem. I'm going to open up the homework today, so make sure you guys get into the MyLab, get started with 8.2. And don't forget, like, share, and subscribe. Hit that notification button. Support my channel.